Well, good morning, everyone, and thank you for coming. First of all, I'll introduce our panel from the right. Leila Fourie, the CEO of the Australian Payments Network.
Morning.
Michael Spiegel, the Global Head of Cash Management at Deutsche Bank.
Hello.
Ulku Rowe, the Technical Director of Financial Services at Google Cloud.
Morning.
And Esther George, the President and Chief Executive of the Federal Reserve Bank of Kansas City.
Hi.
To start, I'm going to first ask Michael. There's been rapid evolution in what was once a pretty staid part of the banking system, payments. And at the start of Sibos, the chief executive of ANZ said, it was no longer a suitable model just to turn up and be a bank. And we hear about the agility of new players, perhaps incumbents sort of less agile. Is there any truth to that narrative that banks may be behind the curve on new payments technology?
I think, I'm not sure how far behind we are. I think it's probably fair to say that we were a bit delayed. As when you think of when a lot of innovation and you look at social media, for instance, some of the giants today have really taken off sort of between 2007 and 2010. And many of us may remember that we were busy with a few other challenges at that time. So I think we were slightly behind in terms of strategic focus on it. And we're catching up there. We're certainly not slow. With the help of, of our technology friends, we're catching up, I would say.
Okay. So, Leila, if I can turn to you, where do banks are coming up to speed with the technology? Where are their opportunities and their challenges as they try to find their new position?
John, I think that the opportunities and the challenges are probably going to be drawn across two lines, and that is the product curation or manufacturing and distribution. And I think that there's enormous and tremendous opportunity for both incumbent banks and non-traditional players to take a role in the distribution or the curation of products. In the current environment, banks and established banks at that provide both distribution and product curation. So Apple, for example, is a great example of a distributor where in their open app environment, many other institutes are able to plug into their API environment and produce apps. And so I foresee that there may be a new world that evolves. I think the challenge in this, and I think in our new world, challenges are the same, are equal and opposite to the opportunities, and most situations will present both challenges and opportunities. And in the manufacturing example that I've given, I think the most complex and difficult issue is that non-traditional players have different value drivers. And so we'll see a social media company with a key objective of holding customers on their platform. The objective is not to move money, and that happens in the periphery. And so the pricing and the value that's attributed to that might be fundamentally different to the traditional banking model, which is to make money by moving money around and to take deposits and lend. And so I think that it's a very exciting world to be in, and I think that those banks that win will be those that own the front-end customer interface.
So, Ulku, in that, where we're looking at that new tech landscape, is it better to be first in, or is it better to wait for tech to mature and to see which becomes dominant?
Yeah, don't wait. Don't wait. There's not going to be some magical moment. Someone's going to say, now is the time to go. I think something phenomenal is happening with technology everywhere. You look back at history, human history. I think there's never been a time that the life experiences have changed so much in a single lifespan. With technology now everywhere, things like cloud and mobile and social, IoT, big data, machine learning, technology is creating, a level playing field for everyone. With cloud, you have access to technology resources to everybody. The barriers to entry to marketplaces are completely disappearing. With social and mobile, now institutions and everybody has access to people, their customers, no matter where they are on the planet. With IoT, you have the same access to devices. All these interactions creating massive amounts of data that can now be analyzed and turned into knowledge and insights and interactions with your clients that's never been possible before. So it's done something very profound. It's created this level playing field for everybody, for both the fintechs, the startups that are small, that got nothing to lose. They are now have this opportunity to disrupt business models. And for enterprises, they have the same access to the technology, and now they can use that to take advantage of their big assets, things like their data, their brand, their people, to use that technology in new ways to disrupt business models, in a way to disrupt themselves before they're disrupted. So it is an amazing time of change, and I don't think there's any time to wait. Time is now.
Okay, so Esther, and I'll get the results of the poll. We'll close the poll off, and I'll get those results put up so you can see them. But in this time of change, and banks working out the new technology, new players coming in, offering new platforms, what do you do with the existing system, and what do you do with legacy systems? And our question is about checks, and looking at the results, it's sort of more than 50%, been more than a year before they've written a check, and there's a decent, there's a quarter asking.
Live in the US.
A quarter is asking what is a check. So what happens, and how do you regulate the old and the new?
Yeah, and it's a very good question. So, as we look at the landscape in the United States, this question about the last time you wrote a personal check is an interesting one, because today, we still see 18 billion checks being written. That's a lot of paper that moves through the system, and it's still quite popular among certain segments. And of course, we watch the adoption, and this has been true over the history in the United States, that we accommodate multiple rails as they come online. I think what will be interesting, as I've listened to each of you describe the technological capabilities of the new rails that we're seeing emerge, is to what extent that adoption begins to supplant some of these other more traditional legacy systems. And that, of course, creates any number of challenges for what existing regulation, existing frameworks that exist around that. But I think it's here to stay clearly, and we will have to think about how that substitution effect occurs over time.
Yeah, and I completely agree with you. As new technology gets introduced, the old one doesn't go away. I have a 14-year-old son. He's a freshman in high school, and he and I were having a conversation before I came here. He doesn't know what a dial-up modem sounds like. You remember that screeching sound? He doesn't know what it is. Yet in the US, there's 2.1 million AOL dial-up customers. Netflix still has 4 million, I think, DVD customers. The discs, you remember those? So, the new technology comes, the old doesn't go away. So I think the challenge for everybody is, how do you build technology for diversification of payments or systems, and how can you handle your legacy along with your new products? And I think the way the technology helps in some of those are things like, I'm going to get a little technical here, but containers and APIs, things that allow you to actually put wrappers around your legacy technology and expose the same services along with the new technology that you're building. So you have this diverse set of services available to your customers, but through a single pane of glass that allows you to manage that technology.
Interesting. Is there a dominant technology? You mentioned APIs. People talk about distributed ledger or the blockchain. We've got instant payments. I mean, is there a risk that we develop a payment system where the technology for now is not actually the technology for the future?
Well,
a beta versus VHS, I guess.
Oh, the beta versus VHS example. So I don't think this is a beta versus VHS example, because I think it's not one or the other. You're going to have to support these diversity of products or diversity of technologies. But I do think there's something to be learned from that, VHS versus beta incident in history. If you look back, I think there's two lessons. I think one, those of you that remember, when beta came out, it was actually a better technology. They had better resolution, they had better sound quality, the image was more stable. But VHS understood the customer, because at the time, the customers wanted to watch films. They wanted to watch movies. And VHS, you could record 2 hours, and beta was only 1. So they actually captured what the customer wanted at the time. The other thing I think VHS did well is about collaboration and building ecosystems. And I think that was probably one of the most important reasons for their success, because while Beta was late to license their technology for others, JVC at the time, which was creating VHS, they licensed their technology a lot earlier, and they went and worked with video rental companies to actually build this environment so that they had distribution. And I think it equally applies well to the financial services industry, and I think technology more broadly. What you want for innovation to foster is this ability to have many participants in that environment. So you're not only just creating competition, but collaboration in this vibrant infrastructure. And I think that's what we believe in. At Google, we've been always big supporters of openness, open source technology, and creating transparency in the system. We've done this over the years. We've contributed thousands of research papers every year. We have open sourced our Kubernetes, our container engine service, and most recently we got our machine learning library, TensorFlow, we've open sourced. So I think going back to your earlier question, I think this is not a one or the other question. It is, how do we create an ecosystem where all the players can work with each other, whether it's through open APIs or collaboration, and create that healthy system?
Okay.
I completely concur with that. In fact, I think if we think around the current technologies of the day, AI, blockchain, APIs, we're certainly seeing an explosion of APIs in the API economy, and the way I referenced Apple earlier, the way Apple has opened up their API environment is an interesting point that will be reflected in the banks, with 20 million individual app developers who are registered in their app store. Now, insofar as other technologies and whether one would exist exclusively in the absence of another, I completely agree that we will see a world where merging and possibly confluence of technologies exist. And I'm thinking particularly in the AI blockchain world. There are some interesting case studies with AI being used in a blockchain environment to manage liquidity trading positions. I can foresee a world where AI is used in smart contracts for blockchain. And so I think it would be naive to think that one technology will necessarily dominate over another. And you'll have collaboration between institutions and collaboration within technology types.
I was just going to add to that, John, that when we talk about legacy systems, too, in this payment space, we often couch them as if they were outdated and should be gone versus the new technology. And the reality is those legacy systems get updated by virtue of new technology. So even the paper check has now moved to an electronic form. And the information that's on there continues to be valuable until there is some reasonable substitute there. We've seen that with ACH, that the speed has been introduced around that. So each of those legacy systems begin to reflect the environment and the evolution of that. And the question is, when you reach the tipping point to where either demand for that product begins to shift in a way that makes you have to decide whether to decommission or make further investments.
So if I could just add, I mean, look, I think technology offers for the banks huge opportunities, thankfully also to the ones that have legacy. I mean, one of our chief digital officer keeps saying that if you don't have legacy, you actually don't exist really. But so you need to have some legacy, but it offers great opportunities for us to segregate sort of legacy systems, create a data pool, data buses, and then have connectivity with API. And I agree that it's not a question of technology that is really, I mean, we're going to use different technologies, and let's also be clear, the payments as such don't necessarily change, right? I mean, it depends on what you define a payment to be, right? So there's the communication angle, there's the authorization angle, and there's the settlement angle. So the settlement is probably not going to change much, but the communication, the way you get there, is going to change a lot. And quite frankly, we don't know where payments are going to land. I mean, I had the opportunity or pleasure to present to the board 2 weeks ago, and I said the challenge is we don't know where payments are going to land, right? It's so innovative, it's so disruptive. The good news is nobody knows. And we all know that we need to do something about it, and we actually have a very good insight. So we create an option space and like a scenario analysis, and then we start working iteratively with our partners in the fintech world, with our partners of technology, to actually iteratively get there and prepare for the future so that we can actually respond to the demands. And that starts from retail and goes into corporate and financial institutions. And in retail, it's very much a lifestyle question rather than a payment question.
Okay, so when you do that and you think about where payments might go, and this is to adopt a question from the audience, do you maintain your core and keep the innovation at the edge, or are you incorporating the innovation into the central model?
Well, we maintain the core. You don't want to disrupt your core, right? I mean, I think that would be a tricky and potentially dangerous game. So you keep enhancing your core, right? But you essentially develop new technology and new solutions outside or inside, but in a stable and ring-fence environment. And then you see as to what you can actually apply. And so the advantage of, let's say, new market entrants is they have no legacy and they put all on one system, right? They also have no legacy clients they need to move. If you have hundreds of thousands and millions of clients and data points in, let's say, 50 countries, you need to migrate that onto a new platform. You need to think very carefully about it, how you do that. So so there is a technological possibility of the new world, and there's a reality of the existing world, where you need to find a way to actually match those two and come up with a game plan as to how you get into the new paradigm, shall we say.
Okay.
Yeah, and I agree, if I may. I think technology can't just live on the edge. Right. It's going to die there. You have to get innovation into the guts and the core operations of your systems. And like you said, it's not just rip and replace. It's about how do I gradually make it better with innovation, so you infuse it into the entire workflow of your company. Like at Google, we operate data centers. I'll give you an example. And data centers are core to our business. It's the big machine underneath. And the costs associated with those data centers is a big concern to us, as well as like the environmental impact of those data centers. So what we did, our DeepMind researchers actually took a look at these data centers. And it's hard to run these data centers because they're not linear, as in how the machines operate, how the equipment works, the weather where you are, even the placement of like the windows or your cooling towers. That makes a big difference in how you spend energy in these data centers. So by building a deep learning model, by looking at things like sensor data, placement of equipment, how the equipment runs, they were able to build a machine learning model that actually took our cooling costs down by 40%. Now think about that number, 40%. If you are a financial services company, if you could take down your transaction costs by 40%, or you could speed up your customer onboarding by 40%. If you could, take your fraud systems and reduce the false positives by 40%. So this is kind of, it was applicable to us, but I think it's equally applicable to the financial services industry, how you take innovation and bring it back to your core.
Okay. Leila, I'll come to you in a minute. We'll get the second question of our sort of pop quiz for the session up on screen while we go to that. So, Leila, bringing that together, so you've actually been involved in the launch of the new payments platform in Australia this year, and we've got open banking coming, or underway. How do you mesh existing and new when you essentially create a new system? How do you create the space for both?
Well, I think if I use the NPP as an example, there was an enormous amount of collaboration between regulators and all participants. And I think that it's very much of a cultural issue. And we've seen tremendous collaboration between the fintech environment and the banking environment as a result of the new solution that's come through. So I would say that the most important thing in meshing different technologies is making sure that you take a regulatory enabling environment, take a strong technology focus, and focus on the customer.
Okay. I think in your opening remarks you said that usually platforms and that people will collaborate. I think you're 100% spot on. Also very encouraging to hear that it's actually in the launch of the new system here, it worked. I mean, banks, some of us, have been a bit worried about fintechs for a little too long. I personally thought we shouldn't be worried about, but sort of Mark Twain said the report of my death was greatly exaggerated. And I think the threat of fintechs by banks was greatly exaggerated. Maybe because of fear to connect and of fear to change. Now that all of us, I think, have connected and actually work and create this new ecosystem, I think we're actually driving towards delivering much better solutions, and we will see that banks are still relevant. There is a place. We still facilitate commerce, right? But we will not facilitate it in the way we used to do it 10 years ago. If 10 years from now, it will be completely different from what we do today. And we need to participate in those initiatives with you, and we need everybody's support and help to actually shape the future, right? Rather than either be afraid or fight it. It's not gonna, I mean, you can't fight it anyway, right? I mean.
So, Esther, if you've got a model where the banks remain at the heart of it, but you have people who are fintechs or operating with the banks, but actually outside the payment systems. They're providing a portal, or do regulators risk losing visibility over the payment system, or perhaps not having full oversight of what's going on?
So this has been an important question in the US, and I think as we looked at the role the banking system plays, and remember historically, the banking system and its regulation is because it has a safety net attached to it. Deposit insurance, there have been experiences historically that made that system one where to preserve stability and to think about the customer, it has a high level of regulation with that access. So as we watched what was unfolding in the US, where innovators were beginning to come into this space and look at the ability to allow customers to make faster payments, I think to Leila's point, we also began to think about not just within the banking system, but end to end really. When you think about the control that now comes into the customer's hands, it was important to engage many in that conversation. We are coming at it late in some respects relative to other countries, and we're learning a lot from their experiences. But I think what we knew in the US culturally is in a fragmented market and one that has many interests, that bringing those interests to the table served us well in thinking about this over the last 5 years to really understand how will this evolution take place, who needs to be involved, and how do we think about it. And that's been an important collaboration, I think, to make sure we understand the interests of the players and where they come to play in that.
Can I add an element to this?
Yes.
Because, I mean, we're always talking a bit about the banks and regulation and regulators and banks. Actually, we all want the same. I think the challenge is not only how to regulate the banks, but to your point, think about wallets, right? So think about you are a bank with 10 million clients, current accounts, and they have $1,000 that move, 10% of them move $1,000 into a wallet. That's 1 billion retail funding that's gone from the system. Now, what happens if something happens to that wallet provider and that's gone? I think the challenges are much wider. There are potential economic challenges, right? The policy challenges, but there are also, I think, challenges for different regulators to figure out how to protect then the people that put the money in a wallet, because I don't think in Europe the population was really thinking about whether or not an Icelandic bank, and I don't want to pick on them even though I do, sorry for that, sorry Iceland, whether or not they were actually part of the deposit protection scheme of Europe or not, right? I don't think people thought about this. It was just a good rate that the internet bank had. Equally, I think they're putting a lot of money into wallets, which is fine. It's just, it's not protected.
I completely agree, and I think the real issue in regulating the current environment is, and Deloitte put it very well, is that we have a pacing problem. And the pacing problem is that regulation that exists today was defined and created for yesterday's technology. And there's a very interesting historic example. So in the late 1900s, the Locomotives Act was created, and this act required that any moving vehicle had 2 people in it. It didn't allow any moving vehicle to go faster than 10 miles per hour on open roads and 2 miles per hour on during in towns. And this held back the UK environment in developing cars. And so this locomotive mindset was applied to the car environment. And it's an incredibly difficult thing to foresee what the next level of innovation is going to bring. We've had some enormous debates in our country around afterpay, which is a solution that falls outside of the regulatory net. And I think purchase payment facilities, or where there is value stored in a wallet, may well fall outside of the current regulatory regime. And the issue is that in the very fast-moving and networked environment, these solutions gain momentum very quickly and become a systemic risk. And so you don't want to necessarily slow the car down, but you may want to give it windscreen wipers or headlights. And unfortunately, often the regulation does tend to lag the new solution. Seatbelts, for example, were only discovered and introduced 70 years after cars were, or seatbelts were only mandated 70 years after cars were introduced. And so it is a real conundrum and an incredibly difficult thing, and particularly in a networked business like payments.
I couldn't agree more. I think, technology moved so fast that, I think we're in this place where everyone's trying to figure out what tomorrow looks like so that you can both operate in that space well and regulate in that space well. And I think, when you think about, how should regulation work, how should incumbents use new technology, I think we all have to start from, what does the customer want? Because that's what's changing this landscape. That's what's creating the tomorrow and what banking is going to look like tomorrow. And the customers, I've already spoken. They're demanding, payment systems that are efficient, they're seamless, and they're instant. They're used to that. And they don't even want to think about payments. I live in a apartment building in Manhattan, and before I leave my apartment, I pull out my Starbucks app. And I order my latte, and by the time I leave my apartment and go downstairs, I pick up my Starbucks coffee and I leave. I don't whip up my credit card. I don't whip up anything. I don't even think about payments. I just walk away. And so if you start with the customer and what they want, you kind of have to imagine what a technology landscape of today is going to create for tomorrow. I think we have to imagine, everything is probably going to be real time. I think we need to imagine that, our risk management systems are going to evolve to include things like AI and machine learning, and all of that is going to be real time, taking into account things like, human behavior and sensor data and weather patterns, you name it. Well, I think, we have to imagine a world where regulations may be expressed in machine learning models. They may be embedded into our systems. So if you think about the problems of tomorrow, I think that's going to actually help us, get to a world where the customers are demanding.
Well, I'll just point to the poll. I mean, when you were talking before about end-to-end and customer, a little bit surprising to me, I guess, but ease of use is the most important feature for people in this room of a payment system.
Can I just make a point to that one before we move on? Because it's so interesting that you say what the clients want, and I don't want to... Well, I agree and I disagree at the same time, because we're talking about retail primarily right now. Now, what do the clients want? Sometimes it's not necessarily invented by themselves, right? So actually, just for an idea, we need to get much better. So I actually thought that was a highly disruptive potential discussion, so I thought I should show up in jeans and a t-shirt, but I'm so glad I didn't. That would have been so inappropriate, given that I'm the token man up here and I would have looked like a dork. But it is so true that I think in the retail, so we launched a platform in retail which is completely outside the bank, a true platform where we work with providers that help us and build it, but it's actually to put apps on and different. But we need to work with the likes of you and others who actually shape the demand of the client of the future. Because I was in your labs a couple of years ago, and I saw what you were working at, and I could see how retail is going to get revolutionized. Yeah. And the retail banks, certainly our arm by then, by and large, had no imagination was coming down the pipe, because we're not in a fast-moving tech space, right? We're fast and we're good, but I think this collaboration needs to extend far beyond banking. It's actually how is technology going to shape future demands, right? How is consumer behavior going to change? How are we going to predict this? And then we need to work with regulators all collectively in order to think about how do we create the new reality, right? I mean, how will we be able to cope with that? And that's actually a collaborative effort we need to take.
Couldn't agree more. We're happy to help. So.
Absolutely, and I think one of the things that this whole new world is throwing out is that payments and banking and financial services and data, fueled by data, is becoming a global phenomenon. And so what happens in one country and the way it's regulated and the ease of use will affect another country. And if I come back to my car analogy, in the 1970s, there was a huge increase in deaths on the road in Sweden. And they evaluated the problem, and the problem they surmised was caused by importing cars that were left-hand drive, and the regulation was right-hand. It was that you had to drive on the right-hand side of the road. And so they changed the regulation to accommodate that. And I think that the highways that we're building between the tech companies, the social media companies, the banks, the fintech, are all global highways, and it's really important that we think along global lines and standardize and approach this in a more unified way. And this does happen as networks evolve and solutions gain momentum. That will become the de facto way of doing things. But people still drive on the wrong side of the road, depending on which country you're in. So it's difficult to achieve a uniform, collaborative, global position in the current environment, whether it's technology-driven, regulatory-driven, or driven by what we feel consumer demand is.
Yeah.
At least there's some hope, right? I mean, because to your point, there's left-hand driven, right-hand driven. I mean, depending where you're from, you have certain preferences. But in payments, right? I mean, there's no totally global payment standard. Not that they're global plugs either. So it's all different when you travel. But ISO 20022 at least gives some hope. I think if we truly roll this out globally with force, and we don't let anybody off the hook, then we could hopefully, we could standardize more, right? And actually I Googled last night, I Googled last night because I was I didn't understand why it's 2022. Now it is because it is 21,247 different standards that the International Standard Organization has defined. And that shows you the complexity, right? And so if we drive payments standardization to the extent that we at least have clarity on data fields, content, then we can actually drive a globalization further forward and hopefully all drive, at least as far as payments are concerned, on the same side.
I think we have to remember the lens, too, as we do that. So clearly the demand as we look cross-border to make sure this standardization, as you talk to, is there. Public authorities look at this through the lens, often through their domestic constituents and the frameworks that they're required to think about. So when you're thinking about the stability of the system, who gets harmed, where you have to think about the brakes in a system, that's often what slows down, I think, trying to keep pace with all these changes. And so I think a lot of progress is being made, and you mentioned those international standards. I think there will continue to be advantages to doing that. Often, though, our domestic mandates will drive the speed at which we get that done, I think.
And what happens to progress outside that regulated system, and specifically, say, thinking of what happened in China with Tencent and Alibaba, effectively creating a payments network outside the banking system that leapfrog credit cards, for instance. How, is it possible in the West that one of the social media giants would effectively become an equivalent where they have our data? Banking's going to open banking, so your data is shared, but it's perhaps asymmetric in that others don't have to share the same data. Is there a potential for a social media giant to actually become a default payments network outside the official system?
I think it's possible, for sure. I think the question that comes into play, though, when we look at the institutional frameworks that have been designed around what's in the public's interest versus what's in the market's interest or an individual player's interest, is often where those things collide, is to understand, is the public well served? Are there issues that put risk to the public on this? And so I think some of these are new enough, depending on where they emerge and what causes them to thrive. When you look at countries where you have more well-established frameworks around that, they could be different issues. I think at the end of the day, it comes down to an issue of trust. The public wants to think, as you talked about, they don't want to think about the plumbing. They don't want to think about the wiring if they flip on the lights. But if it ever doesn't work, and we saw this, and we've seen it, 9/11 in the US, we've seen it with the global financial crisis, then people care about how does the machinery work. So those are some of the things, I think, at least in the US, as we are beginning to think about how real-time payments evolves, we want to think about some of those lessons in the context of what the capabilities are here as we go forward.
It's already there, right? It's just not well publicized and maybe hasn't been as successful, right? I mean, there's a Facebook Pay that hasn't taken off in certain markets. They're looking into a cross-border payment application, right, that could possibly take off or may not, who knows, right? But it's all there. There's multiple wallet providers out there. I mean, how many people have a PayPal account? What do you think that is? If you have value with PayPal, not your credit card, you have a PayPal account. It's a virtual account, we would probably say in banking, or it's a wallet. It's there. It's a reality, it's already happening. And it is growing much faster. Maybe it is not as visible as Tencent and WeChat Pay, right, who have kind of disrupted an early mover of Alipay and taken a fair share of the market, right? But it's absolutely there, and we need to clearly take a look at how we collaborate, how we provide the rails, because remember, there's still a settlement in a currency or in different currencies, which is central bank money, right? I mean, at one point in time, it will come for now at least, there's still movement of, let's say, US dollars or euros, Australian dollars, whichever currency we pick.
So, Leila, in the NPP, is this, that's trying to create this unified set of rails for the existing, for the future. How would a disruptive player like Tencent, or an equivalent where you're not a bank or you're not a payments player, how would that fit into something like the NPP?
So I think it's difficult to look at explicit technologies and look at how disruptors may compete against or with the technologies. In the NPP's case, it is a layered architecture, and it gives rise to the opportunity for people to build solutions on top of the existing overlay services, for example. So I think the point that you made was really relevant, and it kind of echoes the author of Neuromancer, who says the future is already here, it's just unevenly distributed. And I think the question is less about whether incumbents or non-traditional players will dominate, and more about what are the characteristics required for success, and what will success look like in those who are able to dominate in the future. And I think there are a few characteristics. Some of them were mentioned in the open plenary by Shane Elliott. I think those who own the front end of the customer relationship are really important. I think those institutions who are able to collaborate and partner with others will win. Those who are agile and able to rapidly roll out and respond to products will win. But I think perhaps most importantly, those institutions that win are going to be those institutions who prioritize data, who prioritize machine learning, AI, and who are able, whether they're sitting on extremely valuable data that's not being used, or whether they're building a new set of data that doesn't exist, they're able to store, manipulate, and manage that data in a very agile and forward-looking way.
Yeah, I couldn't agree more with it. And, as a technology company at Google Cloud, that's squarely, where our focus is, in that enablement space and collaboration space. Before I came to Google, I used to actually work in the financial services industry myself, and I used to build trading and risk management systems. And with that role, I think the mission was actually quite simple. We were building financial software that's enabling efficient, safe, and sound financial markets. But doing that also involved doing a lot of other things. You had to worry about procuring hardware and setting up networks and supply chain management, making sure all your patch levels are the same across your fleet. So all these things that are not core to your business, we had to deal with. Now, cloud changes that. It gives a chance for the companies to focus their most valuable resources, like their people, on technology that is a differentiator for their business. Rather than worrying about the common, they can now put to use their most valuable resources on the most valuable business problems. And then, once you kind of get to the cloud, you also have the computational capabilities that allows you to handle data, because the data volumes have increased exceptionally. I think today about 2.5 million terabytes are generated every day. And I think the financial services institutions are using only 0.5% of that available data everywhere. So I think I completely agree with you. The winners will be the ones that actually understand that data, be able to turn that data into insights and knowledge, right? Because data in itself is not valuable. It's how you do what you do with that data. Can you apply machine learning to it? Can you have your data scientists extract value out of it? Those institutions will be the ones that will be successful.
Michael, a question for you. Often when we talk about payments innovations at the moment, we're talking about the consumer, sorry.
Yeah.
What do corporates demand? Are they demanding faster payments? Are they demanding more
Absolutely,
secure
depending
systems?
on which one you talk to, right? So I would say it all depends, right? So instant payment, for instance, in, let's say, the e-commerce business is critically important, right? Mobile type of initiation is critically important. So let's assume you compete in India over e-commerce platforms. So I'm not sure we should always mention the names, but there's an Indian company, there's a US domiciled e-commerce company. So the competition is almost to the tune of when the customer returns the goods, which would get picked up by a driver, how quick does the person get payment? So they're super interested in UPI and in the ATA and in the electronic identity, so that enables them to actually have an instant credit back to the customer, and the customer is super happy, right? If you are a very large company, multinational, you may not want to receive a $5 billion payment Friday, at 8 p.m. because you don't know what to do with it really. So it has completely different permutations, and I think we need to work collaboratively through those different challenges and figure out, it's again a collaboration that we need to have between all market participants, regulators, technology providers, us adding value, and figure out how far do we want to take it. And then there's an element I want to mention. So we've done a study, or actually the Economist Intelligence Unit does a study for us every year, and this year we've chosen exactly that set of questions. I mean, new technology, AI, do you use fintechs? And generally companies are very happy to use fintechs, so about 75% said they would use fintechs. However, they like them to be introduced by banks, because they don't want to choose 40 or 50 different ones. And so for them, and why do they not tinker around with new technology or experiment with new service providers? Because they cannot. I mean, if you're in treasury, right, you have to safeguard the money of your corporate. You cannot experiment. So you have to have trusted delivery, for which we come in play, together with technology providers, and say, this is the trusted technology you can use, right? And then they implement it.
Okay. Now, Esther, the Federal Reserve actually has a Federal Register notice out at the moment, and till mid-December you're seeking public input on what the Federal Reserve could do to facilitate real-time interbank settlements, faster payments. What are the most important things the Fed would like to see in the US payment system, and how does it get there from this consultation?
So the work we've been doing for the last few years has really been thinking about, for an economy the size of the US, we would like to eliminate some of the fragmentation, because the nature of real-time payments really requires that people end-to-end be able to facilitate their payments. And as we've looked at that ubiquity, as we've looked to how can you make accessibility in this world more possible, we've issued this notice to the public to say real-time settlement in central bank money. We see this happening around the world. We're looking at Australia. We know the UK, the ECB, many others have begun to offer those capabilities. And so the question we put to the public is, what role should the Federal Reserve play in providing that versus other options? You'll see a list of questions in there where we're really opening up. We've not made decisions yet. We've not concluded how to move forward, although in our tradition, going out to the public to ask those questions will help us arrive at a decision.
Okay. And our top question, or our favorite question from the audience
it's
is...
kind of flashing red there.
Will central banks become obsolete? Which also fits in with another one, can we disrupt regulation? The central banks remain at the heart of guiding the payment system? Is that how you'd see it?
So I think they play an important role. And again, this idea of the plumbing and the hub of economies that allow commerce to be managed has put them in this role historically. So the interest of financial stability, the interest of maintaining the public's expectation for trust, has resulted in central banks. It doesn't mean that that will be true 50, 100 years from now, but I think in the near term, central banks have this mandate. And in the case of the Federal Reserve, we are thinking about what role we should play. The private sector that we convened and collaborated with really pointed to the central bank to say, we think real-time settlement needs to come from the Federal Reserve.
Okay. Just with an eye on the time, what I might do is ask each of our panelists just for final thoughts of 30 seconds to a minute, just for them about what we've been discussing today. Leila?
I'm very excited about the future, and I think I would just reiterate the point that I made earlier, which is that those institutions that will win are those that put the customer at the center, those who embrace data and extract value out of it and prioritize it as a critical component for success, those who partner well, and those who look after their people internally too.
Michael?
I'd like to pick up what you said earlier, what I said at the open and plenary. So the future is now, right? So let's be clear. I would say expect the unexpected at every time, all the time, right? And embrace change. And engage in creating a new ecosystem, right? And the last one I would say, following some companies, Shell has changed its way to do planning for the future many years ago. I think it's a good way, that's how we look at it too, certainly in payments and cash, is don't try and predict the future. Create some scenarios, right, going out and then constantly monitor what's actually happening while engaging in the new ecosystem and change and adapt your scenarios. And don't get frustrated when what you had hoped where payments would go or solutions would go, it doesn't go that way because it will turn out different anyway. Cool.
Yeah, well, I'm very excited about the opportunities. You know, technology has created this level playing field for everybody, for both newcomers and for players that have been there for a very long time. I think it's a fantastic opportunity for firms to think about, you know, how to set themselves up for the future, and that starts with understanding the customer. It starts with making the right technology investments that enable you to do that, things like data analytics and machine learning. And to your point, those that will be able to create agility in their companies that creates that culture of innovation so that they're not just ready for tomorrow's new thing, but the future's new thing. They can move faster. And the companies that master that will be the ones that not only survive, but thrive.
Esther?
So I think as we've listened to this panel, obviously the disruption that is occurring and has occurred already, the opportunity that it brings to consumers, each of us, I think, have a story about how we've used that technology. When I think about the broad public interest, though, I think I'm guided through that lens of saying we want those benefits to remain available to the public, that the plumbing of this payment system remains sturdy. And the way we describe it at the Federal Reserve, we really have a three-pronged approach. We care about the safety of that system, that it will be there, its accessibility, that it can be reached, and that it be efficient in its delivery. And I think as we listen to the kinds of technology and the solutions coming to bear, we're seeing that efficiency, tying it together with these other parts, I think will be key to how it lives on in the future.
Okay. Well, ladies and gentlemen, I'd like to thank the panelists, Leila Fourie, the CEO from the Australian Payments Network, Michael Spiegel, the Global Head of Cash Management at Deutsche Bank, Ulku Rowe, the Technical Director at Financial Services, Google Cloud, and Esther George, the President and Chief Executive of the Federal Reserve Bank of Kansas City. Thank you very much.
Thank you, John.
Thank you.